Ladies and gentlemen, good day and welcome to Relaxo Footwears Limited Q4 and FY24 earning conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Bharti from DAM Capital Advisors. Thank you and over to you, sir.
Yeah, thank you so much, Ria. Good evening, everyone. Representing DAM Capital, it is our absolute pleasure to host Relaxo Footwears Limited for its Q4 FY24 conference call. From the management side, we have Mr. Ramesh Kumar Dua, Chairman and Managing Director, Mr. Gaurav Kumar Dua, Whole-Time Director, Mr. Ritesh Dua, Executive Vice President Finance, Mr. Sushil Batra, Executive Director and Chief Financial Officer, and Mr. Ankit Jain, Company Secretary. We'll begin the call with a brief discussion from the management and then we'll open the floor for Q&A. Thank you and over to you, Mr. Sushil.
Thank you, Rajiv. Good evening. Can you hear me, Rajiv?
Yes, sir.
Yeah. Good evening, everyone, and thank you for joining us our Q4 and full year FY24 earning call to discuss the financial and operational performance of the company. We have already uploaded the earning press release and the investor presentation on the stock exchanges as well as at our website, and hope that you have had the opportunity to go through those. Before we begin the question answer session, let me quickly go through the Q4 and FY24 performance, starting with Q4. During Q4 FY24, we recorded revenue of rupees 747 crore as compared to rupees 765 crore in Q4 FY23, reporting a marginal decline of 2.3% year-on-year on account of slight decline in volumes. EBITDA for the quarter was at rupees 120 crore, up by 2% year-on-year from rupees 118 crore in the corresponding quarter of the previous year. EBITDA margins were up marginally by 69 basis points and stood at 16.1% in Q4 FY24 as against 15.4% in Q4 FY23. PAT was at rupees 61 crore as compared to rupees 63 crore reported in Q4 FY23. PAT margin for Q4 FY24 remained flat at around 8.2%. Now coming on the full year FY24, we have achieved a moderate growth of 4.7% year-on-year from rupees 2,783 crore in FY23 to rupees 2,914 crore in FY24. This performance was largely driven by a significant uptick in open footwear volume, a witness to the efficacy of our strategic initiative to regain market share. EBITDA for the year was at rupees 407 crore as against 336 crore in FY23, registering a growth of 21.1%. EBITDA margin was at 14%, improved by 188 basis year-on-year as against 12.1% in FY23. Margin majorly benefited from the softening of raw material prices, which was partially offset by the increased fixed cost. PAT was at rupees 200 crore in FY24 as compared to rupees 150 crore in FY23, recording a significant growth of 29.8%. PAT margin was at 6.9% during FY24 against 5.6% in FY23, improving by 133 basis points year-on-year. In FY24, the company incurred a total capex of rupees 248 crore, including a purchase of 30-acre land parcel in Bhiwadi, Rajasthan, worth rupees 127 crore. We remain a net debt-free company, supported by a positive cash from operations. Our key strengths include our in-house manufacturing capability, strong distribution network, product quality, and strong brand recognition. We continue to explore new avenues and focus on other new channels and e-commerce platforms for growth. We are confident that our ongoing efforts will yield favorable results for us in the future. Thank you. The floor is now open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Good evening, sir. Thanks for the opportunity. Just two questions in the beginning. This 5 crore pieces what we have sold in quarter 4 against 5.1 in the quarter 1. So can you give some more color what segment, which segment and which markets is driving this? And something more on the inventory side. Is the inventory now under control in the trade, or do you think it will take some more time? And the second question is on the pricing bit. What kind of pricing aspiration we will hold, or we will continue the similar price over FY25?
Yeah, this is Gaurav. Just answer your question. Q4, when we started, there was QC order, BIS was implemented. So if you see that subdued growth or the little minus coming in, that the main reason was that we were implementing BIS. So there was some confusion in the market, like how it will be implemented. So we increased price marginally, and then we saw that we were able to implement all this BIS. And regarding, what is the second question?
I'm saying the growth, what we have seen in number of pairs. Quarter 1 was 5.1 and quarter 4 has come back to 5. So any color, what kind of growth we are seeing in number of pairs, which is now remained at 5 crore on an average?
No, our month January was affected because of BIS. That's why we were not able to cover that. We could not cross that 5.1 figure.
But is the similar trend is continued? And the question was, the parallel question was that whether the inventory is now adjusted or normalized, or still there will be some effect which can be seen in quarter 1.
So inventory is now normalized. There's no problem with inventory. And I think now the things have started picking up in the market.
Okay. And the second question is that in terms of pricing aspiration, what should we look in FY25? Is the price increases will happen or will remain at where we are?
I am Ramesh Kumar Dua. Pricing depends upon our cost of the inputs. If the input remains stable, then prices also remain stable. So by and large, we have to make sure we are always competitive in the markets. Keeping that thing in view, we have our pricing strategy.
Okay. Got it. Thank you.
Thank you. Next question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Hi. Thanks for taking my question. Sir, we have invested in acquiring this land parcel during the year for enhancing our manufacturing capacity. I just wanted to check what is the current capacity utilization and what is the expected increase in the capacity with this new addition?
Capacity utilization around 65%. And the land parcel that you bought, we have to always stay ahead of the curve, because land searching is always a time consuming. So of future growth, so we have land in our hand. So whenever we want to increase production, then we have to start the process of building the factory, because we are always having greenfield projects. And then we take steps accordingly. So that is something keeping future in view that we have acquired this land.
Understood, sir. And follow-up to this is there is a lot of substandard open footwear being imported as of now, which should, in my opinion at least, be restricted after BIS implementation. So is this capacity expansion somewhat factoring in restricted imports from other countries, which may sort of lead to higher demand from local players like Relaxo?
Earlier also, before implementation of BIS, the products category we were in, by and large, the Hawaii segment, Nothing was imported. It is only where footwear industry was not able to make that kind of products, they were being imported. Now after this kind of restriction, definitely some shoes, some EVA slippers, their import will be restricted. And particularly low quality the EVA slipper were being imported. So there will be a restriction on that. So indirectly we may have some benefit. Let us wait and see.
Yes, sir. That's what I'm trying to ask. So is this benefit going to be large in quantum, or is it just a small benefit that can come to players like Relaxo?
No, I don't think it is going to be very large. Overall import was hardly 5 to 6% of the Indian consumption. That is going to be restricted.
Understood, sir. Understood. And one last question is, our ROE is currently at 8 to 10% over last 2 years. So how do you see this levels, and any trajectory that you would like to sort of highlight, and the initiatives that the company is taking to improve this?
ROE definitely, because the profits were under pressure in last 2-3 years. So that's why it has come down, and we have added more asset in the system. So from next year or in coming time, it should growth will be there. So it will improve definitely.
Okay. Final bookkeeping question is, sir, while revenues have grown by about only 4-5% in this year, the receivable increase is about 30-odd%. Is this something one-off, or why is this number increased at FY24 end?
This has increased because there is a pressure in the market. The demand is subdued. So because of pressure in the market, there is an increase of the outstanding. So the payments are slow. You can say the payment is slow in the market.
Understood, sir. Thanks for taking my questions.
Thank you. Next question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity. Would like to understand the demand outlook in both open footwear and closed footwear. How do you see for the next 1 year and beyond? And what are the triggers for the same?
See, as you see, the sports segment is growing faster than the open footwear category. But lastly, what we have seen is that open has grown more than the closed footwear, the sports shoes. So the industry, if you talk about 3 to 4 years time, sports footwear or closed footwear will definitely exceed in growth compared to the open footwear.
Okay, and what are current capacities if you see the breakup of the two, and what is the revenue share of the two segments?
See, as company Relaxo as whole, our closed footwear contributes 20% and open footwear contributes 80%. But one of the brand, which is Sparks, there it is 65% closed, 60% closed and 40% open. So we are trying to grow this category, Sparks, which has more contribution, and it has more contribution of closed footwear.
Okay. And why was closed footwear under pressure this year? I did not understand that part.
So that is because of the demand. A lot of lot of new entrants have come in the markets, and the price what they are offering, but there's more supply than demand. In last 2 years, a lot of capacity has been put in by the other players.
Okay, so you mean there's an oversupply of products in the market?
Correct. Local players are there, yeah. Correct.
So you see that oversupply correcting in how much time? Is it fair to us? Understand that, or it will be all market forces?
It depends upon market, yeah. It depends upon the market, but consolidation will happen definitely.
Okay. And will you please help us understand the brand-wise revenue share as well?
Yes, already we have shared in our investor presentation, but even then I can tell you. So Relaxo is contributing, Relaxo with Bahamas 25%, and then Sparks and Flight both are equal, so 25% Relaxo plus Bahamas and rest 50-50 Sparks and Flight.
Okay, so Relaxo in Bahamas 25%, Flight 25%.
So flight is 37 and
Sparse is 37. So 50% of 75 divided by 2, 37 and a half, roughly half.
Okay. Thank you so much, and I may come back to the question queue. Thank you.
Thank you. Next question is from the line of Vidisha Seth from Ambit Capital. Please go ahead.
Yes, hi. Thank you for the opportunity. My first question is on the market share. In 2Q, you had mentioned about gaining market share that was lost in FY23. So any comments on how market share has moved in the second half of the year? That was my first question.
Yeah, you must have read, we have sold maximum number of pairs. We have touched 19.5 crore. That is all-time high. So this is done by more sales in open footwear. So we have gained our volume growth is more than the value growth.
Okay, so on value basis, market share would have increased.
Yes, correct.
Got it. And the second question was, we've always been talking about increasing our saliency and presence in the south of India. So any incremental initiatives that are being undertaken to increase the share from that region?
So we have implemented DMS across India. So DMS has been implemented throughout. Now we have launched the app. So this is a retailer app. We are doing engagement with a retailer now. So with the help of the app, we are able to touch 50,000 outlets. So 50,000 outlets have downloaded this app. So there's a direct connect from company to the retailer now. So if you talk about South, last year South there was a little decline in sales. There was pressure in the market. So we are just trying to maintain that market share.
Okay. And essentially, this app that we're talking about, would that largely help from a more accurate demand forecasting perspective?
Correct. Demand focus. A lot of things. We can even pass on these gifts to the retailer directly. We'll understand what is the market demand and which outlets are demanding what is the market share of this outlet. A lot of data will come through that.
Understood. That's all from my side. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Onkar Khungarde from Shri Investments. Please go ahead.
Yeah, good afternoon. My question was mainly regarding the revenue, which has been flattish for the last 3 years. And what kind of revenue projections you can model for this? And you have talked about the industry growing at, not industry, the footwear market size growing by around 15 to 17% in next years. So your growth has been 3 to 4%. You are projecting the market size to be around growing at 15-17%. So what kind of projections we can go ahead with?
This year we have taken certain sales strategic initiatives in which we have launched the DMS, which will control or keep an eye on secondary sales. Then we have improved our retailers connect. We have also through BAS, brand as seller and e-commerce platform, selling direct to consumer. So all this information which we'll gather through all these 3 apps will be a kind of a big source of knowing market what is what. And all this combined effort will help us penetrate and grow better in the coming time.
Yeah, but if you can specifically guide us, like what low digit growth or like mid-teen growth or low single digit growth, or what kind of growth you are expecting at least? Not say 1 year, 3 years you can do.
We are expecting a double-digit growth this year.
Which you haven't done for last 3 years.
Yes, because a lot of initiative we have taken in this, lot of sales transformation is taking place, whose fruits will bear this year onwards.
Okay, and what kind of margins are sustainable on a medium-term basis?
Around 15 to 16% EBITDA you can expect.
15 to 16% of EBITDA.
15 to 16.
Yeah, 15 to 16% of EBITDA, correct?
Yes.
Okay, but even the EBITDA percent for last 2-3 years has been like ranging from 12%, 14%, 15%. So like sustainable basis, you can say 15-16% is possible, right?
No, next year it is going to be like that.
Okay.
We had difficult years, because raw material volatility was too much.
We achieved in this quarter also.
This year, if you can see this quarter, we have achieved 16% EBITDA.
Yeah, this quarter, yeah. And if you can talk more about like the competitive intensity, what kind of competitive intensity you are seeing currently in the market?
That is always there, it will always remain. We have to keep ourselves more competitive than others. That is our focus.
Yeah, but just now you said that there were some new entrants. So because of that, what kind of competition level it is currently?
So more people, when they come into industry, they pass on more credit in the market, they pass on more discount in the market. So this happens once in 5-6 years, but now things will consolidate and we will definitely gain the market share.
Okay, all right. Thank you.
Thank you. Next question is from the line of Tanmay Gupta from Motilal Oswal. Please go ahead.
Yeah. Hi, sir. Sir, I just wanted to understand the revenue declined 2% in this quarter and gross margins improved to 60%. Is that because of the high sales in closed footwear for this quarter? Is my understanding right?
So the sales were not high in this. Open footwear was more if you talk about sales.
So, sir, just wanted to understand where the gross margin lever is coming from.
We have taken a moderate price increase.
Okay, in the open footwear.
Yes, correct.
And so because of the raw material price increase we have taken, or we will maintain these prices going forward?
We'll maintain these prices. It depends upon raw material also. Plus, because of BIS, a lot of we have improved the quality. We have improved the specs of our for our products also. So it's mixed. It's both.
So we can expect like 58 to 60% of gross margins going forward, I believe.
Yes. Yeah.
Understood, sir. And so second question is on the sportswear. So like sportswear would be around 200 to 250 crores in our Sparks.
Sparks we have done 400 plus.
No, the sportswear could be like how much of the Sparks total?
50% is that. If you talk about closed footwear, 55% is closed of total 1,000 crore what we do in Sparks.
Right. So, sir, I just wanted to understand the strategy in increasing our closed footwear penetration, because as you said, a lot of unorganized players are also come up, and we have obviously the competition from the organized. So, going forward, are we how will we penetrate the footwear, closed footwear in the market, and with the price range or premiumization, or what kind of strategy, if you can little bit tell me?
A lot of steps, it's not special this year. Every year we take a lot of steps, it depends upon the launching of new NPDs we launch every year, and then new markets, new distributor, opening new outlets, then e-commerce, the penetration in e-commerce. Earlier it was through a distributor, now it is through BAS. A lot of steps. There are like 15-20 steps we take. The strategy we can't define right now.
Yeah, but means the price range would be around 400 to 600. Means the mass segment we will be focusing on.
You're talking about ASP 400 to 600 or what?
Yeah, it means ASP and the trade distribution channel like that.
ASP will be almost similar. We'll try to improve that. The Spark ASP is more than 450. Yeah, overall.
Understood, sir. Thank you.
Thank you. Next question is from the line of Varun Gajaria from Boring AMC. Please go ahead.
Hi, sir. Thank you for taking my question. Just wanted to understand, so how is the supply chain aligned in terms of sourcing RM? Do we import raw materials, or how is it aligned at this point? And I'll ask my follow-up question after this. You can pick it up.
Presently, supplies are consistent. There's not much of a challenge in sourcing the material. The materials, natural rubber, we are sourcing here in India itself, and the other polymers like EVA, they are imported, and it has been always there. So presently, we don't find any challenge in that.
Okay, so these polymers are imported from China? Primarily?
No, not China. There are a lot of other countries.
Oh, okay. Got it. So there's no challenge there in terms of sourcing, from what I understand.
I don't think we source any polymer from China.
Okay, got it. And what is the impact of BIS that we'll be seeing on overall raw material supply and the relevant demand across industry? Because it seems there's been some commentary in the market that currently some of the factories based out in China have not been approved. So sourcing of sportswear especially has been a challenge since the last few months. So how do you see that trending in terms of inventory and overall demand?
The overall, as far as we are concerned, we have implemented this BIS standards, and it is the people who have been importing and depending on them. Maybe they will face some problems, but as far as we are concerned, we have been our own manufacturers and selling, so we will have no issue of that.
All right. Okay.
Thank you. Next question is from the line of Chandra Govindaraju from Ashmore. Please go ahead.
Hi, sir. Thank you for the opportunity. What was the Relaxo mix last year for FY23?
You want to do channel mix or brand-wise mix? What you're asking, which mix?
I am looking for the revenue mix.
But revenue brand-wise or what?
Brand-wise.
25% is from Relaxo and Mamas, and 37% from Flight brand, and 38% is from Spark brand.
Okay. That is for this year, right? Right? I am asking for FY23. What was the
revenue-wise? Revenue-wise, it was more or less because volume has grown in the open footwear, but value mix is more or less same. There is not much change.
Not major change is not there.
Major change is in the volume, but value-wise, it's more or less same. 25 and 37 like that.
Okay. What I am trying to understand is in terms of pricing, did Sparks also had corrections? That's what I am trying to understand.
In Sparks, there is no correction.
There is no correction. We have maintained the volumes, and we have grown in volumes. Our value is low single digit.
That is in open footwear. No?
Yeah. Major volume growth is in open footwear.
So, if I remember correctly, last year when we spoke, we were looking for more premiumization of Sparks. Because there was raw material volatility and all, you might have not increased the prices, but can we expect price increases in Sparks in this year for FY25?
No, we have been developing our new products as per the requirement of the market. So premium products are also coming. Not that we have restricted anything. Now ultimately it is the need of the consumer or pick up in the market what happens. But we are offering premium articles also in the market.
Okay. Got it, sir. Thank you.
Thank you. Next question is from the line of Vikas Jain from Equirus Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. So my first question is with respect to this implementation of quality control. This led to
Mr. Jain, we are not able to hear you.
cost. Hello?
Yes.
Hello? Hello? Is it better now?
Yes, sir. Please go ahead.
So the question was, with the quality control being implemented now, has that led to any increase in the cost per production cost per pair for us, or any sort of something? Is there any meaningful uptick that you have seen in that?
Well, there has been some moderate increase in cost, which we have already accordingly passed down and revised the rates. So not a major issue at all.
All right.
Our quality is otherwise also, good. We have been always quality conscious players. So it was not much of a thing. Only certain specs which government wanted to have, so we have aligned there.
Correct. So then in that scenario, how do you rate the implementation across implementation that are operating in the same price points? And how do you think the adherence is being implementation? How would you rate the implementation actually going on that level? Means are the competitor and everyone following that vigorously?
As per the rule, government has exempted micro and small from this implementation of QCO.
Correct.
It is only on medium and large industry. We are one of the large industries. So as far as we are concerned, we have implemented.
Right. But means at a ground level, are you seeing that because some players are exempted, is there any differential that is being created? Is there any impact coming out of it on the overall demand?
No, we do not see that. It's too early to say that because there's some extension given by government also. So we wait and watch. Situation is there.
Correct. Okay. So second question is over closed footwear. Means in qualitative terms, while how would you rate the demand actually at this point in time? Has it been facing a lot, not to even open footwear also, that the rural is picking up and people are going back to normal. So how do you see the journey in that point of time, and do you see that further a good amount of pickup happening, right?
So in last year, inflation was high, and we witnessed a lot of down trading by consumers, and because of that they were delaying purchases of sports shoes, which is in discretionary in nature. So going forward, we are expecting good monsoon, and the demand should definitely uptake.
Okay. And you believe, while as you rightly mentioned, there was some market share loss, but we have gained by passing on the raw material price increase. Substantial room for further gaining share left.
This year we have taken a lot of sales transformation initiatives that will help the company to grow at a better rate than competition, I think.
Understood. Okay, sir. Thank you so much. I will join back the question queue for any further questions.
Thank you. Next question is from the line of Jasmine from VT Capital. Please go ahead.
Hi. I wanted to understand your trend on the realizations. I see that quarter-on-quarter there has been a slight increase on the realization, but the volumes have also grown consistently with that. So going ahead, are we looking at more and with rural picking up also, do we see any realization cut in open footwear and in closed footwear? If you could give separate trends for those, please.
So realization is not going to come down. It will improve. Because of whatever rates we are having, they are very competitive, and there is no room for reduction of any prices so that it goes down. It will only improve.
So both open and closed footwear.
Yeah, yeah.
Yeah. And my last question is on the international side. I wanted to understand how much the exports are contributing and how the different countries are doing where we're exporting.
Yeah. I'm Hitesh Dua.
Hi.
We are around 4.5% of total company turnover in exports. And we are getting traction from all the continents like Africa, then Asia, then Gulf, then Central America, then Oceania. So all markets are responding well. So wherever we are, all these countries we are selling in our own brand, and we're getting good traction. And we're doing all the marketing activities also in these markets, in these priority markets. And we are bullish for future as well.
Great. Just one clarification. I wanted to understand how much is the margin difference when we are exporting and with domestic. It could just be a range if you could provide.
It is almost similar because we get incentive also through government. So it is almost similar when we compare with the company level margins.
Thank you so much. All the best.
Okay, thank you.
Thank you. Next question is from the line of Shantina Malik Chaudhary from Credit Info Edge. Please go ahead.
Okay. Yeah. Am I audible?
Yes.
Yes.
Hello. Hello.
Yes, ma'am, you're audible. Please go ahead.
Yeah. Hello. So my first question is on our take on premiumization. So what are we looking into how to grow our premium product and how much quantum of revenue we are generating from the same? And going forward, what should be the percentage from the same? This is my first question.
So premiumization is a journey, so every year we are trying to increase our ASP. Last year, because of the demand, the volume was the volume we grew much more than the volume was more than the value. So this year also we are expecting in our NPD we'll launch more of the premium articles. Try to increase our ASP higher. Yeah.
Yeah, so despite that, the realization trend is going to be in the range of 145, 150, or there will be an increase in the same?
Definitely there will be an increase because last year we were at 161, which came down to 148. So we'll definitely try to go above what we did last year.
Okay. And sir, just wanted to understand how much quantum of revenue comes from this premium portfolio in percentage?
So if you talk we have a premium brand called Sparks, which is contributing 1/3 of our total sales.
Okay.
So if you talk about premium, definitely we have added more brands like Bahamas and Flight Urban Basic. So our journey is on, we have to improve in premium range.
So this will continue to remain 1/3 this year, or we are looking some increase in that?
There will be increase. Definitely there will be an increase.
Okay. And second one is on e-commerce. So how we are looking to leverage on the e-commerce segment and what is our take on that?
See, last year you have seen there were a lot of discounting happening on e-commerce. So we have taken some corrective action and now we are focusing more on BAS, business as seller, to control the prices. Yeah.
Okay. Okay. And so any percentage figure that how much e-commerce forms as a part of the total channel?
We do roughly around 9 to 10% in e-commerce.
Okay.
Of our total
last
sales,
one is sorry, sir?
Of our total sales, 9 to 10% of total sales, yeah.
Okay. And the last one is will our salience in terms of open and closed footwear will continue to remain 75% or it's gonna see some changes?
No, right now it is 80% is open and 20 is closed. So we are expecting that in 75-25 it will become.
All right. Okay. Thank you, sir.
Thank you. Next question is from the line of Mr. Rajiv Bharti from DAM Capital Advisors. Please go ahead.
Yeah, thank you, sir. So this is regarding the capex line item. So you have done 250 crores this time. You mentioned that 127 crores was for this land, and typically you do 25-30 crores on the molds bit. Can you explain the remaining part of it?
It's a last time it's a plant and machinery also, and we are adding buildings also. So last year we added one manufacturing plant for back-end sport in the PU category. And machines also we buy in the range of 30-40 crore. It's a routine expansion which is always required. So 25-30 is the mold. So that is the breakup.
Sure. And looks like, I mean, is it right that the spark utilization currently is close to touching 75%?
No, that is not the case. It's around 55 to 60. Overall company at 65. So that's the overall number.
And are there immediate plans of expanding this sparks bit in the next fiscal or so? In terms
already we've generated enough capacity. We have enough capacity. That's not required immediately. Any expansion on the capacity.
Yeah, and this online bit you mentioned that 9% is coming from online. On the Sparks bit, this was close to 25% odd. Have we seen any improvement or directional improvement there after March?
So you're talking about this April or last full year? This.
Yeah, I was under the impression that the B2B guys have been slightly slow in ordering or placing orders, and that's why. And we were slightly heavily indexed on the Spark side on the online bit, right? I think 1/4 of Sparks is online. Have you seen some improvement on this front? Let's say second half.
Second half of last year you're talking about, right?
24, yeah.
Yeah. So last year there were a lot of issues coming from some of the sites. They were undercutting because of they have that big billion day and all whatever. So we have corrected that and we have taken control on our own, and now we are focusing on brand as seller. So that we are just maintaining the volume at the e-commerce. If you talk about that.
Sure. All right. Thanks a lot.
Thank you. Next question is from the line of Resham Mehta from GreenEdge Wealth. Please go ahead.
Yes, thanks. This is Resha. So the first question is that, while our revenue for this financial year has grown by 5%, but if we look at the employee costs and other operating costs, they have grown almost by 13 and 16% respectively. So anything exceptional here?
No, there is no exception because revenue has not grown as expenses has grown. So in case of employee, definitely there is an increment and adding of some people also. So because revenue has grown by hardly 5%, so that's why percentage has increased. But in absolute term, there is a normal inflation cost has increased.
All right. And can you also break up your revenue into how much of it comes from metros, tier 1 to rural?
We have distributors district-wise, so we do not capture exactly what is the rural. So major distributors are 5 lakh plus towns, So we are not able to capture exact what is the rural sale, because rural is villages. We are not able to capture right now that.
What are the mechanisms?
Yeah.
Got it. All right. That's it from my side. All the best. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask question. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Thank you for the opportunity again. I just wanted to understand your A&P expenditure for the year, and are you planning to increase, decrease, maintain the same for next year?
So if you talk about A&SP, so it is roughly around, for advertisement we do around 4%, 4 to 4.5%, and the rest is the schemes, and that both put together comes to 9%. And we're trying to maintain that same number.
So when you're looking at growing at a higher rate next year, what initiatives will help you to grow? Just wanted to understand that at a higher rate when the demand continues to remain a little subdued as per your commentary earlier.
Yeah, so they are not one, but there are multiple actions we are going to take. This is one, advertisement is one. Then we are improving on our reach to the retailers. So we have implemented the app, which I was talking earlier. So we have enrolled 50,000 outlets, and our focus is how we can make it to 1 lakh outlet within this year. So a lot of activities are happening at BTL level, at at ground level. So definitely advertisement, if we see the market going up, that will also increase. And we are focusing on e-commerce, adding more outlets on EBOs. So there are a lot of things.
So EBOs, how many you are going to increase this year? Would like to understand.
So 50 to 60. We currently have more than 400. We're going to add 50 to 60 more outlets.
50 to 60 more outlets. Okay. And any market competition related activity that you see, like increased discounts by competitors, etc. So how are you reacting to the same?
So definitely, see, a lot of activities. Again, I'm saying that we are trying to go in the unrepresented areas. We are adding more number of distributors, adding more number of outlets. So the reach, we are trying to increase that, and we are controlling the outstanding, and we are keeping an eye on the market and taking steps accordingly. So this is a monthly program what we do, and we try to understand what is happening in the market and take corrective actions.
Okay. And sir, has the competitive intensity increased in open footwear as well, or only closed footwear as per?
Majorly in closed footwear.
Okay, understood. And so, in closed footwear, what is your capacity utilization? I missed that part.
It is 55% in closed footwear.
5%. And our total capacity is 150,000 pairs, if I'm correct.
Yes, you are right. It's a 10.5 lakh pair per day.
Okay. Thank you so much, sir. And all the best.
Thank you. Next question is from the line of Vikas Jain from Equirus Securities. Please go ahead.
Thank you for the follow-up. Just one question.
Mr. Jain, we're not able to hear you.
Sir, is it better now? Is it better now?
Yes, it's better now.
Sir, in the presentation you gave the brand-wise volume mix for FY24. Could you help me with the numbers?
I think we lost you.
Sir, brand-wise volume mix for FY23, if you could give.
Brand-wise also last year also almost it was same share, similar.
You're talking volume?
Yes, volume. You said it was different, right? You said value it was same, but volume was different, right?
Yes, volume was definitely different. So let me get some data. Just we can share if I can get it. Yeah. Just I think I have to provide
value. We can provide, no? That is easily.
Volume to value. Anything else except this one?
Nothing, sir. That was the only question.
Value-wise, we are same, but volume, it has increased in open footwear.
Thank you. Next question is from the line of Mr. Onkar Gungade from Shree Investments. Please go ahead.
So my question is, have the management set any internal targets for the next 3 to 4 years for themselves in terms of revenue, profitability, cash flow, ROE, ROC, etc., to grow the business? I just wanted to know the management's vision in the business in terms of...
Next year we have told we will be having double-digit growth.
3 to 4 years.
We aim to grow this double-digit growth for next 2 to 3 years.
What about the other parameters, sir? Profitability, ROE, ROC?
Profitability.
The other parameter, ultimately we have to avoid the competition, raw material prices, and keep our prices ultimately competitive. So accordingly, I don't see any fear that we will face any challenge in with EBITDA or profitability.
Why this specific question is that let's say 5-6 years back, this was a different kind of Relaxo we used to see, but now that thing is no more in the company. If you look at the ROEs, where best industry best level, the revenues growth were also seen very good. But I guess last 3-4 years that has not been the case. And this question.
No, because in the past there was a lot of volatility in the raw material prices. That affected us. Since we have to import the raw material and we have to maintain a long supply chain, but now things are stable. That is why we are telling you things will be better.
Raw material volatility will affect each and every player in the industry, right? And why won't it affect only Relaxo, right?
Because, we are one of the largest importer of raw material. We can't depend upon local availability of material. Other local players, where they have small consumption and they buy from local market. But we have to maintain a long supply chain from all imports.
It's correct, but the raw material volatility would have been there 5-6 years back as well, right? Still, your growth was quite good. I just wanted to know what is the exact reason for this.
This raw material volatility what you're talking about, it has been too much if we talk about previous year. Because if we talk about EVA, from 120 rupees per kg, it went to 300 rupees. And within a short span, it came down to 150, 120 again. So that kind of volatility we never seen in past.
Okay. So this is like related to a particular commodity you are talking about. Volatility in a particular commodity.
It was ethyl-vinyl acetate polymer, it was low density polyethylene also, PVC also. All polymers, they became volatile. And because we have to keep good inventory of all these things. And that was the reason that otherwise generally we are beneficial in the rising market. We always have good inventory. This is the first time when it rose to 300 and then came down to 150. So that affected us.
Okay. Can you confidently say that for the next couple of years your profitability will be higher than the revenue growth at least?
No, nobody can predict what kind of raw material we will get, what kind of external uncontrolled circumstances we will be facing. Only thing is we have to keep ourselves competitive, and based on the raw material cost, we have to keep our pricing.
Okay. In terms of growing the business, what kind of model you are targeting, like EBO or like company, like what kind of models you are targeting? The online business, online model, or like what exactly you are targeting?
No, we are focusing on all channels. Not that we are neglecting any channel. We have to see our EBO should grow, our e-commerce business should grow, general trade should grow, export should grow. We are focusing on all these channels. Not any channel at the cost of another channel.
Okay. Thank you very much.
Thank you. As there are no further questions, I would now like to hand the conference over to Sushil sir for closing comments. Over to you, sir.
Thank you all for joining the call. This is all from our side. Looking forward to joining you again. Thank you very much.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.